It doesn't matter if it's 20% or 0%. It doesn't matter.
Modern monetary theory.
Yeah, John, is Sol going to flip ETH? That is the question. That is the $1 million question, the $1 billion question.
It's starting to sound less like the rollup-centric roadmap and more like the restaking-centric roadmap.
So translation, the ticker is SOL, not SWI.
I'd say it's genuinely probably something like a solid 50-50 at this point.
We're here in Bangkok in the basement studio with the two biggest research KOLs in all of Thailand.
Our mission is to hold the biggest brains hostage for...
Yeah, these guys aren't going to make it out of
This
here.
is secretly hostage-taking video. We're going to have to hold up some signs proving that at a certain time in today's newspaper.
Oh, man. Well, we brought this together to address John Charb's infamous quote tweets of Solana at the same market cap of Ethereum, which is not much anymore. So, yeah, John, is Sol going to flip ETH? That is the question. That is the $1 million question, the $1 billion question.
Yeah.
100.
It's almost
billion,
a trillion.
100.
Yeah.
It's almost a
$1
trillion question.
Yeah, I mean, so part of it was like the timing of it was I was just like at the point where I was like, I feel like there's a lot that the Ethereum community like I think needs to like acknowledge and kind of learn from the past 2 years and like see what Solana's doing, what can we improve on, stuff like that. I think there's been like directionally a little too much just like denial and just kind of ignoring everything that's going on there. So part of it was just like I was like, all right, fuck it, I'm gonna be really loud, like really explicit on this, like see if people start to listen. Very concretely, like I'd say it's genuinely probably something like a solid 50-50 at this point. That SOL, or I mean, maybe honestly another smart contract platform does, I'd say 50-50 in the next, like, call it 5 years or so, is what I'd say the odds are at least. I think it's still tough to happen in the like near to medium term, if for nothing else. I mean, like, look, like Ethereum has the ETF, even with the new administration, like it's probably gonna be like a decent little while before SOL can seriously get an ETF. There's a lot to overcome there. So I think it's like pretty tough to happen in the near to medium term. But if you just look at them both objectively at this point, you just like play out the trajectories of where both of them are going, especially with, I mean, I think it helped obviously Solana a lot, like the election in the past week. I think that like meaningfully increased the odds, to be honest, because one, it means the bull market keeps going. And what happens in the bull market is like, we see it now is like a ton of new activity is all going to keep going to Solana. Like it doesn't give time for like another competitor to kind of come and chip away at that, and it's probably going to reduce Ethereum's regulatory moat in the call it like medium term, where like SOL get an ETF and then you have like less of just this kind of like inherent advantage. So I think there's a real chance like with the trajectory of both of them are going on of like very concretely like SOL is continuing to attract a shit ton of like new builders, bringing real applications. It's like actually getting a lot of value. People are using the chain. It's onboarding new people. If you just like keep playing that out and Ethereum just like kind of stays in this middle ground of like, like we're not really sure what we're doing with the L1, like maybe we improve it in a couple of years, or like maybe we just kind of kick everyone off to the L2s and like Uniswap and everyone should like kind of go, just like dip out and go make their own chains, and we like stay in this weird middle ground, and then we're just like sort of hoping like Base and these other twos just like kind of just like pump ETH a bunch. Like that seems like a risky bet where like if you just keep playing that out, like yeah, I think there's like a very good chance that like SOL would kind of flip in that scenario. But yeah. That's where I'm at now.
So translation, the ticker is SOL, not SWI. Sorry, just to give like the 30 IQ translation.
Yes. Like very, very literally. Yes.
I'm just trying to help our audience.
Yeah, I mean, not financial.
Not financial.
Not financial advice. I mean, the SWI thing is also hysterical to me. Like, I don't know. That'll probably keep going up too. I have no
32
idea.
billion FTT.
It's insane. Yeah. It just keeps pumping.
What's the Nasdaq's valuation? It's like 40 or 50 billion.
I think it's like something like that. Yeah.
It's nuts.
Yeah.
So is this a similar sentiment that you share with regards to ETH flipping Bitcoin? Because we haven't heard of the flippening in a long time. I mean, it's been some time. I know, Tarun, you were saying that the old Bitcoin maxis are coming out of the woodwork.
Oh, yeah. A lot of the Bitcoin maxis I've followed since like 2014 or 15 on Twitter, a lot of them, the funny thing is like, they were really hardline, like fuck ETH throughout DeFi summer, throughout 2021. And then FTX happens and you think they're like, it's a perfect time for them to dance on the grave of all this stuff. But then they all disappear because it turns out they're all paid by BlockFi. And so, of course, that blew up. But all of those people have been either running out of money or reimagining their lives, and they've decided that they want to talk about SOL flipping ETH instead of ETH flipping Bitcoin. So I'm not sure exactly why. I find it funny the Bitcoin maxis are
I think
aligning
it's
themselves
obvious
to SOL.
why.
Well, I think it's like very boring thinking to just be like, the enemy of my enemy is my friend. But like that's clearly what's happening. But I don't feel like the Solana people are reciprocating that to Bitcoiners.
Yeah.
It's like a one-way thing.
Yeah, I mean, like it was like what I was kind of joking about it. Like I had a tweet like basically along those lines like a couple weeks ago is like very plausible scenario, and like I think it's like a very plausible scenario is at some point like SOL flips ETH, and then once that happens and the seal is kind of broken, is like most of the other smart contract platforms like you really even more aggressive become like, all right, these things are like probably just fighting it out on the tech and the users. You know, this thing isn't money. Like there's nothing inherently special about them. And then Bitcoin gets to like really stay the like very special snowflake. Where like I think Ethereum has like some credibility of like, oh, we're a special snowflake too. Like we were very early on. We're super decentralized, incredibly neutral, blah blah blah. It's like sort of hard for like anyone to argue that like SOL is going to be the global currency when just like Kyle owns as much of it as he does. Like honestly, like that's like kind of tough to sell to people, and like that's pretty tough. But like I think that's concretely the reason why like Bitcoin people see it is because if Ethereum is the winning like smart contract platform looking thing, I think there's a real argument in that world that like I think the probability of ETH flipping Bitcoin in that world is much higher than the world where like SOL is the winning smart contract platform. What are the odds of SOL flipping Bitcoin in that world? I think it's like way higher in the Ethereum
You're
scenario.
implicitly making some assumptions there because you're kind of saying SOL will be the winning smart contract platform.
Oh no, I'm saying in either of those scenarios of like let's say that let's assume that like ETH wins as the smart contract platform, like SOL never flips it, SWE, blah blah blah, like none of these chains ever end up doing anything. I think in that world, the odds of ETH flipping, let's say that like if Ethereum wins, let's say the odds of ETH flipping Bitcoin just for simplicity is like 50% in that world. If we say like this alternate world is like, okay, let's say that SOL flips ETH and like they win the whole smart.
Then you're saying nothing flips.
Yeah,
Bitcoin.
I'm saying in that world, the odds of SOL flipping Bitcoin is like maybe it's like 10%. I feel pretty confident that there's like a meaningful delta between those two of like what is the odds of that asset like beating Bitcoin depending on who the platform.
What does it mean to be the winning smart contract platform? Sorry, I'm stealing your job.
That's a great question.
I think the simplest way to measure it
like
is
the ETH maxes are going to be out in force if this is just SOL pumping.
No, I mean, like, I think the honest way to measure it, and I think that people like underrate this measure because I don't know, they don't want to like sound like it. Is like I think the valuation of the asset is like a very simple measure of like how successful are you right now. Like the fact that ETH is worth 300 billion and SOL is worth 100 billion is like a very direct measure of like we kind of think that ETH is more successful right now. Like,
but what if you're just to play devil's advocate here? What if you're like a company that spends like basically distributes all your revenue to your affiliates because like by having more affiliates you grow faster, like say Amazon in the 2000s where like the valuation didn't really reflect the market share and market power of Amazon, and only eventually once they started actually taking the revenue back to the main company and kind of having more of a value capture mechanism did they kind of dominate. So there is this trade-off that like potentially, and I'm not saying this is true because none of the rollups have proven, other than maybe Base, that they could do this, and Hyperliquid. Those are the two to really think about. Is sort of like that maybe these are the affiliates that are generating a ton of usage of your asset, but like you're giving them all the revenue effectively and for a while now, and then you find a way of enforcing it later. And to some extent, this is one reason why I think, to foreshadow our debate that we're going to have later this week, I think restaking is a way better value capture mechanism for an L1 than rollups.
Yeah. So that actually gets to the point though of why I don't think the Amazon analogy works here, is because that was definitely the case in like a company where the thing is like very literally valued on like we think that this thing will make money in the future. That would work if ETH and SOL were valued on, do we think that they're valued on like revenue capture and like ability to do that in the future? And I think in practice, neither of them are. I think both of them are like in this hand wavy way measured on like, how successful do we think the thing is? Like, is it going to be money? And I think that's actually more correlated to that, not like how much revenue is it going to capture. And that's why I think that the market cap of it is actually like a pretty good proxy for like how successful is the thing being, because I think the closest thing that people are pricing the thing based on is like how much economic activity is like sort of happening in this realm, and we think it's like sort of money in that thing. I think in practice like that is what it's being priced like more off of than like, oh, we think the future cash flows of Ethereum is gonna be like 3x higher.
Well, I don't necessarily think it's cash flows as much as just like value created by the system versus value extracted by the system. Like Amazon basically just spent 20 years like creating a ton of value, extracting zero.
Yeah.
But it did that in order to maximize market share. And how the value gets captured might not necessarily be revenue. It might be like doing burns. It might be like the roll-ups start burning their fees. It might be more like restaking. So like there's just a lot of weird ways where it doesn't like look like revenue, but from an equity, or well, okay, these are not securities, whatever, but equity like instrument, you know, like there's lots of ways you can kind of, you know, make their value go up that are not necessarily, hey, we have a dividend and are giving you revenue.
I'm not sure if you need those disclaimers anymore.
We're also in Thailand.
Everything's fine.
Thai SEC.
Everything is fine. So, John, then to kind of add to your thesis, do you think that SOL is starting to have some of these moneyness properties that are present in Bitcoin specifically for sure? And then ETH has kind of, you know, accrued those over the last 5 years or so as well, as like the Lindy effect has picked up and as different kind of monetary policies have changed. Like, do you think SOL is also starting to get a little bit of that moneyness, or is it still purely like a technology, software, like meme coin chain?
I think that we can say, at least empirically, there is some level of the market is valuing this thing based on something above whatever we expect the cash flows of this thing to be.
Yeah.
So empirically, I mean, like, there's something being added to that valuation. And I think when you talk to like most market participants, it's like there's like some degree of this is like a commodity money like thing, and like that is something that we value. So I think very literally there, like that is certainly. Like it has monetary qualities, and that like people are very literally valuing it in some way, like taking that into account. But yeah, I mean, when you compare SOL to ETH or Bitcoin, I think that there is like an order of magnitude difference of like Bitcoin is just obviously like way ahead of everyone. ETH is definitely behind, but like, you know, a lot of the money like properties are there. And then I think like everything else is just like way behind in terms of just like, what do we think of just like all of these more, I mean, some of them are measurable, but like a lot of subjective features of like, what do we think is the general kind of neutrality of this asset? Like, what is the predictability of, you know, what do we think its supply and everything is going to be in the future? Like, what is the decentralization of the owner base? All of those kinds of things. Those things in general, I would say, are like in order of magnitude stronger in Ethereum versus SOL, which is like not a surprise. I mean, like,
there's no unlocks.
Yeah, no, exactly. Like,
there's no like FTX VC round.
Exactly. Like, there's no like US dollar unlocks. Like, that's kind of like a weird thing if you're saying like, this thing is money, but like, all the VCs like own half of it, and like there's like a bunch of structured unlocks. Like, that's kind of a weird thing. So I mean, like on all of those qualities, and this is back to the point of like why I think Bitcoin people would love for SOL to flip ETH, is because I think it's like really hard to like cross that gap of like, oh, this is the like decentralized non-sovereign world money thing, when like that's the genesis.
It turns everything into that meme of like the two people fighting and the one person smoking the bong, and Bitcoin is like smoking the bong and the other two are fighting, but you need both of them at the same level to be fighting. Yeah, I would maybe take a slightly different view of this, which is like, you know, something Bitcoiners love talking about and Ethereum people hate talking about is monetary premium. And monetary premium is usually sort of defined as like there's a value of producing a good, there's a value that the good is valued at, and like, is there a gap between those, and is that gap sustainable? Like, is it always kind of higher than such that there's sort of some systemic kind of profit like looking thing? And classical economics loves saying this, you know, quantity theory of money thing, which is like money velocity times quantity is sort of gives you some notion of monetary premium. But I think in crypto, the thing people have always been kind of, especially post Bitcoin, people are always like, well, money velocity is basically infinite. Like, I can send arbitrarily high amounts of capital for like the same duration as sending $1. Or $1's worth of the
That's
asset.
bullish, because that means monetary premium is infinite.
Like that, but like I think that's often why I think the econ kind of logic for this is wrong. But the way I prefer thinking about it is kind of, you have some notion of revenue for the system. So like maybe it's MEV, maybe it's execution fees, maybe it's DA, and then you have some notion of people who are willing to hold the asset and stake the asset relative to how much they're getting in fees, and how much are they unstaking or leaving or joining the network, right? And from those metrics, SOL and sort of ETH both kind of actually look pretty good, because people are not really unstaking very much, or they're trying to capture extra revenue from the staking derivatives. But the one place they are very different is their like collateral usefulness. And I think that's the thing to me that like separates them as moneyness. And like in ETH, you can use it as collateral in like everywhere. Sol, even in Ethereum land, there's just not that much you can use Sol collateral. You can like trade Sol perps, and like maybe your position could be used as collateral, but there's really no like synthetic Sol that people trust, which is kind of a difference, right? Like if you think about Bitcoin, there's wrapped Bitcoin on every other chain. That's like a sign that you're actually valuable collateral even as a synthetic version. There's wrapped Ethereum on Solana, but there's not the other way. And I think like when Solana is money, people will view it as good enough collateral to be going the other way. And that's sort of like a very stupid but like obvious kind of thing that you could say.
So rather than make it Solana versus like ETH, we already got the Solana Flippening ETH thesis as a smart contract platform. What is the thesis that you're starting to describe for Ethereum as usefulness of collateral? Like I'm curious to get your like ETH Flippening Bitcoin thesis, because it's starting to sound more like it's starting to sound less like the rollup-centric roadmap and more like the restaking-centric roadmap, or the collateral-centric roadmap.
Yeah, I mean, so one reason I think Rollup's value capture mechanism for the L1 is quite low. It's a little bit like Amazon doing, again, like affiliate marketing, and the affiliates take 90% of the profit and the company takes like nothing. But the affiliates now have to go source all these goods and deliver them to the end user, right? Because like 90% of things you buy on Amazon now are not really coming from Amazon. Like they're at Amazon warehouses, but like some other distributor is like fulfilling it, right? That's what I mean by affiliate. And I like to think of the roll-ups in this. And again, it's never, there's none of these analogies are perfect. All analogies are wrong.
It's okay,
whatever.
Kyle isn't here.
Yeah. But like it
You have a J Jarvis.
I think it's a kind of useful proxy to think about.
Right.
Especially in terms of a company that just completely disregarded profit motive for many years to capture market share. And I do kind of view the roll-up roadmap as doing that. The problem is the roll-ups can only impact ETH price indirectly. Like they're taking away a bunch of fees, so people don't have to buy as much ETH on mainnet, or they don't have to buy as much ETH to pay mainnet fees, and the fees on the L2 are way lower. So the only way they really are impacting the L1 price is the fees all paid on the L2 need to be a lot higher in aggregate over all the users. Like you've increased the volume so much that the aggregate fees are close to what you were taking away from the L1. And then you know all the users had to buy that ETH and push the price up somewhat. So it's kind of this indirect mechanism. It's not like even if a rollup is using ETH as its gas token, which is by social fiat, right? It's not like that's a forced thing. But like, let's assume that everyone's alignment is whatever. They're going to use ETH as the gas token. Even then, they're not really using ETH as collateral there. Like they sort of are, but the way the withdrawal structure works in the L2, it's not really the same. Whereas in restaking, you're actually forcibly locking the thing as collateral, and because it has value at risk, it actually has to be earning income. And so people will be buying the base asset to earn that income, which is very different than just like flow-based purchases to pay for fees. And so I'm just sort of a believer that collateral value for Bitcoin has always been where it drove a lot of value. It never was, like the Gesso story of payments and people sending Bitcoin transactions. If I compared the total amount of collateralized Bitcoin transactions at like centralized exchanges and in derivatives like WBTC, and then I compare that to like the total number of Bitcoin transfers over time, it's like everything is going into like all the value generated is coming from using Bitcoin as collateral, not as payments effectively, right? And so I think Ethereum has to cross that chasm, and I just don't think the rollups do that.
So
that would be my reason. I think it would be hard to flip unless restaking starts generating insane revenue.
In that paradigm, how do you calculate monetary premium? Because it's no longer like the velocity versus quantity.
So the velocity versus quantity thing is like some kind of equilibrium theory, right? Like it assumes that you have like infinitely many people trading and arbitrarily liquid markets, right? But in practice, that's obviously not true. That's why I think also a lot of economists kind of don't really use it. But there is a sense in which there's sort of a collateral value of money, which is like how much can I earn per unit collateral in a risk-adjusted manner, and over what it costs me to buy the input asset, right? So like if I think about the production of Ethereum or any asset in proof of stake, So in proof of work, the cost of producing the asset is somewhat divorced from the asset itself, right? Because the cost is like buying electricity, opening data centers, whatever. In proof of stake, that cost is basically zero, and most of your cost is the collateral cost of buying the 32 ETH or buying the 1 ETH or whatever, you know, the minimum threshold will be, and then locking it up and being able to earn revenue without kind of losing money, right? So it's like I'm putting up 1 ETH of collateral, I'm earning X% per year, right? And the point is something like restaking immediately improves your monetary premium. You're in the sense of the value of the asset is not just the future cash flows of the network itself, it's the future cash flows of other networks using it as collateral. And I think rollups just don't do that, right? They're not really using the asset as collateral. They're using the asset just for netting, which is like a lot lower of a price impact. It's not going to increase the price as much.
Anything to add there, John?
Safe is moving the world's GDP on-chain. With the introduction of SafeNet, Safe is taking this to the next step very soon. Check out net.safe.global to learn more about how Safe is moving the world's GDP on-chain.
Welcome aboard on our journey into the singularity. This is the endgame roadmap for Frax and Fractal, the new L2 out of the Frax ecosystem that is totally based on fractal scaling. Fractal is a modular L2 blockchain built by Frax with modular and fractal scaling in mind. Fractal scaling is based on the Mandelbrot set of fractal images, and it explains how L2s become L3s and the entire app chain lifecycle goes through its evolution. The Frax ecosystem is made of some of the top builders in the space and has stemmed from its OG days of the Frax stablecoin. It is now in the LST space, the LRT space, and this Fractal L2 joins the existing suite of Frax products, including Frax Swap and Frax Lend. You can see Frax Ferry, the bridge to go from any chain, Arbitrum, Optimism, or mainnet into the Fractal mainnet. Bridge your tokens and bring your Frax assets into the Fractal ecosystem. Join today to get the best out of Fractal. You are still early. Join today. Take part in our expedition into the singularity. Redstone modular oracles are available on 50 plus chains, trusted by over 100 clients and over 6 billion in total value secured. Visit redstone.finance to find out more.
No, yeah, no, I agree with that. I mean, like, this is a big part of why. I mean, like, why I have also been arguing a lot lately. I think you should improve the L1 a lot for a lot of these reasons. I think that the, like, activity happening on the L1, in my mind, is just strictly better for the asset compared to it happening on the L2. Of, if you think that the value is coming from fees, like, you are strictly going to get more fees to the asset based on, you know, the same activity happening on the L1 versus the L2. And then at the same time of, like, the gas token, a lot of these places, L2s, they're probably going to disintermediate as a gas token because, like, fuck it, like, users want to use USDC.
I mean, you already saw Blast, right? Like,
exactly.
All the native yield stuff basically showed people are not necessarily going to use ETH itself.
Exactly. Like, that's going to happen. And then the other big part is, in practice, like, where is the vast majority of ETH, like, used today throughout DeFi as collateral, all these things? It's on the L1. Like, it's not on the L2s. So in practice, like, if you want to have this be this, like, high quality liquid asset that's used, you know, throughout DeFi, like whether it's mint stable coins against it, you know, used in trading, used in restaking, like most of that comes from, like, you should just improve the L1, quite frankly, and have that stuff kind of natively happen there.
I must say, DeFi and Arbitrum has gotten pretty deep in terms of liquidity, dApps. So I would say Arbitrum is kind of one exception.
One thing though that's funny about that is around 1/3 of Arbitrum TVL is in the Hyperliquid bridge contract, and when Hyperliquid leaves and to start their own chain, then that's 1/3 of TVL has gone. In some ways, you could view Hyperliquid indirectly as a sort of vampire attack on Ethereum. If you,
they are completely. I mean, because they're just going to launch their own L1, from what I understand.
And that TVL is likely going to migrate because it's generally active investors. It's not like TVL and like L1 lending protocols where people forget that.
Well, there's a lot of points farming going on right now. Still, you know, you can just drop your ETH or USDC in a vault. So there's you know, there's some of those people there. Well, one thing that I also wanted to add to your Solana collateral point is that outside of just the actual usage of SOL on other chains, actually just collateralizing SOL and borrowing against it and like using it from a user perspective of mine over the last like 4 or 5 years on chain, I actually feel like quite a bit more risky borrowing against my SOL or like doing different things with it on SOL DeFi compared to like Aave and
a very clear reason, a very clear statistical thing, and this has been coming down. So this is not because like Solana DeFi is dying. In fact, I would argue the protocols there are improving at a faster velocity than the Ethereum protocols. Yeah. But a very clear measure of the premium being worse, and one way you oftentimes measure monetary premium of bonds is you look at the volatility of the interest rates for the repo market. So like I own a bunch of bonds, I want to borrow cash against it because I have some expense I have to pay, and then I'll pay it back. And usually those repo rates are like how you compare different currencies, like comparing the euro to the dollar. And the repo rates for SOL, if we make an analogy of being like the rates in Camino or the rates in other lending protocols, are much higher and more volatile than the ETH ones. Right. They're like double digits.
On SOL right now, or 9% just to deposit in Camino.
And
the
so,
USDC borrow rate is very similar to ETH right now. It's like 12% because it's very speculative times, like currently. But I noticed that as well. So basically, that's a result of what property exactly?
Well, the main thing is that like there's not that many people who want to supply their SOL that way. They would rather earn 7% effectively riskless staking.
Yep.
Plus MEV rewards, so it actually could go higher, versus using it as collateral, right? And this comes back to John's point about the emissions, right? ETH's emissions are basically zero. So like at zero emissions, you have to go to the repo market, right?
Yeah.
But here, and so like if I compare this to say like the U.S. government issues a ton of bonds, right? They're issuing a ton of debt, but yet people are willing to treat it as the best collateral. Why is that? There's a fuck ton of demand. So it's like there's just not that much demand for the SOL side sort of rewards in the sense that people aren't really selling. They're just kind of like locking into stake and not really rehypothecating in the way that I think people on ETH are, where they're like taking staked ETH and then putting into Aave, putting into all the protocol, Morpho, etc.
It's a result of like ETH DeFi being more battle tested. There's Lindy effect of all of that. Also, I think the users are a bit of a different segment, and then also just
inflation. I think the lack of protocol inflation is like actually the biggest. But I think like if I were to take the kind of John talks about improving the L1 for ETH. I think what I would do in SOL, and it's kind of hard to do because they have this unlock overhang, but I would definitely be trying to like systematically reduce the inflation.
Yes. Yeah, I agree with that.
Why just to get the actual demand for DeFi and collateral
on-chain DeFi will be better. Yeah, like SOL as collateral on centralized exchanges is actually much more comparable to ETH.
Yeah.
I think it's just that like the DeFi usage is more true to like how much risk and how people value it as collateral. And so, and the other thing that's interesting, I think, that probably improves the monetary premium long term, but short term might not, is slashing in Solana just went live in the 2.0 release. So, you actually have value at risk now versus before there was no slashing. Yeah,
free ride. Also, restaking on SOL is being built out slowly but surely as well.
Yeah. So I think SOL is actually, if they can get the inflation down like a lot, like ironically, I think when Ethereum was doing the ultrasound money thing, they probably didn't really need to be as aggressive as they were. But I think SOL actually is the opposite. They need to be more aggressive on this ultrasound type.
So how do they get their inflation down? Is this like, it's got to be like a governance process, like a SOL improvement? Yeah.
Just have some Ds to like lower the curve.
So what would you recommend, like a slow implementation over the next like couple years, or would you just say like
a slow implementation where like as there's an unlock, you have a larger jump down, and then before the unlock's a slower. Because like you want to basically compensate people for the amount when there's the unlock, where like there's gonna like imagine there's an unlock that's like $10 million and $5 million is gonna get sold.
Yeah.
That $5 million pushes the SOL price down by let's say like 10%. I'm making some hypothetical here, right? And you want to basically make sure that inflation covers people who stay locked through the unlock and are still staking.
Yep.
So the idea is you want the inflation curve to be kind of like not too steep. Until the unlock, and then after the unlock, you drop.
Okay.
Based on how it goes. So like I think stuff like that is like a way of dealing with this. I don't think ETH had to deal with this at the scale that Solana is at.
Because of the unlocks, or just because
because they didn't really. Well, starting POW is a much more beautiful. It's a much more beautiful distribution.
The advent of DeFi as well. So like it was like this is brand new. It was a lot more like, oh my god, this is crazy, new tokens, airdrops.
And I think staked ETH actually, like Lido, bridging the gap between POW and POS for a year because like the beacon chain was live. That was huge. That like helped really build. In Solana, they didn't really have there's not that much time to do that. It like went
the LST
live.
adoption in Solana is still super low.
Really?
Yeah.
Interesting.
So these are all these things that I think make Solana not money. But like you can see the direction it would have to go to be that.
Yeah, no, I definitely agree with that.
Don't kill me, Raj.
Like
I mean, have you got Raj's favorite "I'll kill you" tweet?
Yes.
So that's why I'm like, don't kill me, Raj.
John, you gonna add something?
Yeah, no, I definitely agree with that. Of like most of the like it's funny because most of the conversations around stuff like issuance I think they end up being like kind of dumb conversations. Like most of them end up being the thing which I've written about before of like a lot of people do this like dumb like profit for the chain equals fees minus issuance thing, which is like doesn't make any sense. And so you can take that to one side of it, like to say like, oh, okay, issuance like completely doesn't matter. It doesn't matter if it's 20% or 0%. Doesn't matter.
Modern monetary theory.
Just credits and debits, bro. That's all it is.
And like there is some sense in which it doesn't matter of the like, I think the P&L calculations people are doing are wrong, and like you're sort of moving money around, you can stake it. Like that doesn't really matter, but it does very tangibly matter for stuff like this of when we're talking about like, okay, but what are very literally the impacts on DeFi and how the asset is used? It makes a big difference if the asset for the has like 20% inflation or 1% inflation. That completely changes like what is your DeFi going to look like? How is the asset going to be used? And especially when a lot of this is like alleviated in some sense if like everyone on Solana just used Jito Sol and like just treated that as like exactly the same thing. But I mean, you also just in practice do not see that at all. Like most stuff is still SOL based. That is what most of DeFi is. And so you end up with this big problem there where there is like a big opportunity cost to it. And like that does change the way that DeFi ends up looking.
It's also somewhat path dependent, right? Like
Yeah.
Ethereum had an entire DeFi summer of yield farming and people got accustomed to that behavior of like depositing, and DeFi got known for APYs, and SOL people know it for meme coins, not for depositing into yield farms.
Although I feel like as the meme coins crashed, you definitely saw the TVL go the other direction recently. So like I would say like the next 3 months will be interesting. Is it a regime shift or is it still staying in meme coins? I think the other thing that's maybe kind of worth pointing out is like this whole monetary premium discussion is like generally semi theoretical, but one way it wouldn't be theoretical is if Flashbots, say like Jito, had a token and you were actually able to measure like the net revenue generated by Flashbots the token versus Jito the token versus the base underlying, and the difference between those is somehow this like excess collateral magic plus whatever animal spirits.
Could you just explain that for smooth brains, please?
Yeah. So if I think about like the revenue, the MEV revenue that the chain is getting, like realistically, if we think about who is getting the MEV revenue right now, it's like basically the proposers themselves, right? And so that represents like some revenue they're getting that they kind of add to their overall belief. But if we think about sort of Flashbots or Jito in the, not to keep making this Amazon analogy, but they're kind of like, we think of them as like the like person who's the marketplace who's like getting them this excess revenue and then taking a cut from the different affiliates. The amount of revenue they're taking. So like, let's suppose they took a fee switch. Let's say the fee switch was like 2% of MEV revenue, and then look at where their token trades relative to like the implied value from the fees. Because arguably Flashbots and Jito, if they were like businesses, are cash flow businesses, right? They have very clear cash flow revenues, right? And so then from the Jito token price, if you know how much it's trading above its sort of cash flow, then you can use that as a lower bound for how much SOL is trading above its cash flow. Now, so Jito will have a fee switch on soon. So I think you can do this calculation for SOL like once that's live and see how much it changes the token price over like a few months.
Is this a Flashbots token alpha?
No. There's no such thing. I was just saying. I think if there was a world in which it was like Jito and you could like compare ETH and SOL apples to apples, but it's like not. So you unfortunately can't.
Yeah. Well, guys, I think this has been fantastic. Thanks for joining us and having a fun conversation.
Yeah,
definitely. It was great.
Thanks.
Cheers.